the concept of correlation. So if you want to look at, is known as the average directional movement index, and we'll measure only on these symbols. We'll measure only on this symbol on USD, AUD USD. We'll measure on NZD USD, and we'll also look at AUD, Euro AUD. So to mention before we start, AUD USD and NZD USD are always positively correlated. They are Tokyo pairs. So if you trade here, you should look for the same trade here, and look for an opposite trade on Euro AUD. So we want to know why they are positively correlated, and to do that, we are going to use this indicator, and we look at the instances when AUD USD was giving us a sell. We want to see what's the other symbol giving us. So AUD USD, we have the first place. We have this one here. This was around 7 in the evening yesterday. We had a sell in the morning, and then exactly at 5 in the morning we had the same trade. So let's check if there was the same trade on 7th of May. So you can basically see that this was a good trade. We had the same thing across. If you find that this is happening, if you find that there's a similar signal around almost more than 3 pairs happening it's really good you pick that trade. So that means that when this was happening, when this signal was showing up, we actually could have picked this trade. We could have picked, this is how many pips? This is around 147 pips. AUD JPY up to the top, we had 200 pips, that's 314 now. USD up to the top, we had 137 pips. So what that simply means is, if that was happening while you actually could have taken that trade without knowing anything. So you basically pick the trade and let it be. So another thing, when you enter trades based on correlation, you are basically entering trades at the same time. That means when you exit, also should exit all of them at the same time. Does this make sense? That when you enter trades based on, you should enter around the same time, and when you exit trades based on correlation, also exit at the same time, which means when you had this trade from this point up to this point, you're supposed to, or when you're exiting maybe here, you're supposed to exit the same trade. When the price is there, you're supposed to exit, and when the price is here, you're supposed to exit. This is true for pairs that are positive correlated. So assuming you had this was a buy. Amongst these symbols, there is always a symbol which is going exactly opposite the ones that are going together. So one of them is this NZD USD, Euro AUD. So let's add the same indicator and see if that will give us the same thing. So we want to see, yesterday we had from yesterday we had a sell around 7 in the evening. We had a sell on the USD. See what was happening at 7 p.m. on Euro AUD. So this is the exact around the same time. This was 6. Always has the best correlation. You have where is it? We'll check another AUD. So we basically want to look at those symbols. This is not a good one. Let's check this. Let's see what happened on 7th of May first of all, so that we confirm with the other AUDs if all of the same thing. So this is what happened on 7th of May around 5 in the morning. We had a buy, and then the same thing, we had a buy, we had a buy, we had a buy, and then we also check 11th of May. We had a sell. Then we check yesterday, because yesterday we had a sell also on AUD USD at around 7 in the evening. So you can basically see that if you are you had the same trades very similar trades. And to make it even much better, you are using an indicator which comes by MT4. What that simply means is, if there's a trade, there's a trade. If there's a buy on AUD, if you find that we have a buy here, we have a buy here, we have a buy here, then there should be a sell on the other one. If that is true, pick that trade and leave it. Just pick the same, like in this case, if you are around on 7th of May, we could have taken a buy there, we could have taken a buy, we could have taken a buy, we could have taken a buy. At the same time, we could have sold the other one. Just entering trades at the same time, doing the same thing at the same time, can actually improve your trading performance if you understand. So one thing is clear, that pairs don't move independently. Symbols don't move independently. Like, you cannot find that a Euro AUD is moving on its own in one direction. If it's doing that on its own and the other pairs are not doing the same thing, do not trade it. It could be deceiving. From experience, if you find correlation, if you find several pairs doing the exact same thing, trade them. Enter that trade correctly, hold on to it, and when you exit all of them going the opposite direction. Exit all of them at the same time. Don't wait that the price has not reached or whatever. Just exit all of them same time. I hope that makes it much better and safer. If you can't do that, if you can't trade correlation, you may find it really hard to make money trading forex, because assuming that person who trades GBP JPY, because of volatility, you'll understand how to trade this very well, but the problem will comes when it begins to do what you don't understand. So while you are trading this one, you'll be making money solely on GBP, and you forget that while GBP JPY is moving downwards, there are other symbols that could be doing exactly the same thing. So you could trade those symbols at Y. The idea is to maximize. When the market is doing something you understand, maximize on it. When the market is doing something you don't understand, you are out. So you make a lot of money when there's the same thing happening, but when there's something different, you leave it. So that's the good news about correlation. You'll enter the same trade on different symbols, exit at the same time, triple or double what somebody is observing one pair is making. So this should be, I think, this a lot of sense as at now, and for that reason, I think we need to end it, the webinar.